listening to the Daily Gold Podcast, covering precious metals, the junior mining sector, and global capital markets for intelligent investors. Now, here is your host, Jordan Roy-Byrne.
With the election coming up and the ongoing pandemic, there's plenty of noise. One day, there's going to be no stimulus. The next day, there will be stimulus, and a lot. One day, there's going to be a vaccine that's coming really soon. The next day, it won't be coming until well into the next year. One day, this person might win, or this party might control Congress. The next day, it's the opposite scenario. These are all examples of noise. On the day of this recording, Friday, October 9th, precious metals popped higher, ostensibly on the president's reversal on the stimulus. The record 4-month move that we had in precious metals and miners is not going to be corrected in only 2 months. The larger trend of correction and consolidation is likely to continue. I don't believe today was the start of a new leg higher, but I digress. As an investor, you have to ignore the noise and focus on the things that only you can control. You can't control the daily news or how the market will react. As an aside, news events like Fed statements or presidential tweets and political happenings are not going to drive the next leg higher anyway in precious metals. In the same vein, don't worry about trying to predict what the next catalyst will be. I get asked about this frequently, but this is not how markets work. The market is a discounting mechanism. It anticipates and discounts things in advance before they are reported in the news and become obvious to most people. I'm speaking of the larger trends here, not day-to-day happenings. Precious metals are in a strong, healthy primary uptrend. They are correcting in the larger sense, as they should. Eventually, precious metals markets will find an equilibrium and buyers will outnumber sellers again. That remains months away, in my opinion, but I could be wrong on the timing. The reason or the catalyst for the next leg higher will reveal itself eventually, but not before the market begins that next leg higher. It might be increasing inflation expectations, or it could be that stimulus package, or another form of increased federal spending. Don't worry about it. The reason is not important right now. We are early in a new cycle for precious metals. This isn't 2017 or 2018. The primary trend and fundamentals are well established at this point, and they're not going to change anytime soon. Now, circling back, what can we control? Let's keep this as simple as possible. You can control the stocks you buy and when you buy. Therefore, focus on companies. Become an expert on various companies and their fundamentals. Learn how they can add value, potentially, over the quarters and years ahead. My view is to buy on weakness, or if we don't have enough weakness, buy when a consolidation or correction is in its mature stages and the market or that stock looks likely to break out and push a lot higher. In closing, ignore the noise and focus on the things that you can control. This will allow you to make better investing decisions and ultimately a lot more money in the long run.
Thank you for tuning into the Daily Gold Podcast. For more interviews, editorials, and analysis, log on to TheDailyGold.com. And for premium coverage of precious metals and the best junior mining companies, visit TheDailyGold.com/premium.